Welcome to SoapBox.
Where will be the entry jobs for financial services? Where are the admin jobs, the power planning jobs going to be in the future?
But as you were saying earlier, Matt, our young people coming into the financial services industry, profession, how do we support them more in being able to understand?
But the title of the paper is The Fallacy of Concentration. The point they tried to make in the paper, at no point in the last 100 years would it have paid off for you to just reduce concentration. It's Advisor 3.0 Soapbox edition.
So guys, welcome to Soapbox, the little sister to the main Advisor 3.0 podcast. Joined today by Philippa Hann, one of my fellow B Corp leaders and travellers, CEO of Paradigm Norton. Welcome, Philippa.
Yeah.
And also, as always, by the financial services disruptor ordinaire, CEO of Timeline, building the kind of technology which means we can all rest on a beach 2 or 3 days a week. Abraham from Timeline. Welcome, Abraham.
Hi, Matt. Hi, Philippa. Great to have you on the show, Philippa. Thanks for joining us.
You.
So everyone's had a good read through of the financial services news as we've got it coming in hard and fast. I think maybe if we start with the first one, Abraham, this was something you spotted, and I'm glad you did actually, because this was a great read. It was actually a LinkedIn post, wasn't it, from our friend Dan Haylett, all about, well, he titled it The Empathy Delusion, which I thought was really good. So it's all about how AI is changing financial services, is likely to change financial services from here. He is positing that financial advisors are going to be really squeezed by AI, actually. So, Abraham, I don't know if you want to lead off and give us kind of a summary of his thesis. It's a long read. Everyone should go and read it. But, you know, give us the headlines.
Yeah, it's a brilliant post by my good friend Dan Haylett. Essentially, he makes the case that the empathy advantage, the point that financial advisors make over and over again when we talk about the risk of AI taking the financial advisor's job, the point we hear over and over and over again is that the advantage that the human advisor has over AI is this empathy angle, the fact that you can sit on the same side with the client, you can truly understand all the emotions that they're feeling and the power of this human relationship, and that it will be very difficult for AI to replace or replicate that. The point that Dan makes is that AI is actually already being used by millions of people as a companion, for companionship, for therapy, and for improvement of their well-being, mental well-being. So, and one of the things I like really about Dan's article is that it is really very well referenced. There are a lot of research and references in terms of where this is happening. So I'll read this paragraph. So it says ChatGPT now has 800 million active weekly users, and according to a Harvard Business Review report, one of the most popular use cases is not work related at all. It is therapy and companionship. A 2025 study by the Rand Corporation found that roughly 1 in 8 Americans aged 12 to 21 are already using AI chatbot for mental health advice, and a 2024 YouGov poll found that a third of adults would be comfortable consulting AI chatbots using a human instead of using a human therapist. So that is really the core of Dan's argument in this post. I will shut up Philippa, what do you think of this?
Okay, so I have a bit of a problem with hysteria around AI. I was recently talking to a bunch of other CEOs. We had a really vigorous conversation about what AI was going to do to the industry. And it ranged from, we're all going to be out of a job in 5 years, to I'm paying it no attention. I'm sure it will come across my desk as and when I need it to. At the end of the conversation, it was a really interesting and robust conversation. There were some really strong views around what it might do. And at the end of the conversation, I said, okay, great. Where are you all getting your information from? What podcasts are you listening to? What books are you reading? What articles are you looking into? To a person, zilch, none of them. No one had been doing their homework on understanding what had happened in that AI world. And I think we are in real danger of entering into just some crazy hysteria around what might happen. It is moving super fast. On the one hand, it's moving super fast, isn't it? Right. And I think that's really interesting. On the other hand, ChatGPT came out in 2023, was it? Yes, it's changed things, but the hype has not materialized. I know we've had ChatGPT around for a few years. I don't know that it's changed professional services that much. It's pretty jagged, isn't it? AI is really jumping forwards, but it still can't count. I think we are in real danger, aren't we, of just assuming that it's terrible. So I don't view AI as good or bad. It just is. It's part of our world now. But you look at all the hysteria around Sora and all the generative AI and the videos and all the rest of it. We can all tell which videos have been put together by Sora, because there's usually someone jumping in front of a train to rescue a cat or something, isn't it? And that's all just, it's kind of gone away. I don't know if you remember all the hysteria about blockchain, gone away. So I am really allergic to trying to diagnose exactly what's going to happen in 3 to 5 years. And I think it's really dangerous for us to make a lot of assumptions around things. I just think we need to monitor what's going on rather than try and diagnose what's going to happen in the future, because no one knows. I mean, right? No one knows where this is going to go. But there are limits to how the algorithms work. It is, it's not sentient. It's not alive. It's not going to be alive. It is machine learning. It's done most of its learning. It's not really able to teach itself. Yes, I totally understand and agree that people are using it in ways that we hadn't expected. But isn't that the point? People are using it in ways that we hadn't expected. So I just think we need to be more careful about how we think about this stuff, and more willing to dig into the detail, more able to look at how our clients are using it. I don't know whether anyone has received any refusals to instruct them because somebody said, oh, I could do that in ChatGPT and I'm not going to you. I think it's a lot more complicated than even that very long post suggests.
Yeah, so I think I agree with some of that. I'm going to challenge Philip on some of it as well, if that's allowed. I don't think it's the large language models actually that we need to be so worried about. And just to pick up on one point, actually they can teach themselves. So I can't remember, Abraham will know which one of it is, but one of them, they've actually started getting it to code itself. And the problem the company's now having is they haven't got enough human engineers to keep track of what the AI is doing when it's building its own code. And
I think we need to be really careful about that stuff. Really careful.
No, 100%. But actually, and predicting 3 to 5 years in this space is absolute nuts now. I mean, 3 to 5 months is hard, frankly, at the moment. But the AI is it's achieving things very, very quickly, and time is becoming a bit elastic. So its capabilities are increasing exponentially, particularly once it starts building its own core code. Its ability to build from there is really interesting. Just on your point about numbers, which I have to say, until very recently, I agreed with you. It was better at, constructing Word documents or images or video. So I thought what was really interesting was the launch of Hazel in the US, which was launched in very early beta form, and even as an early beta full of errors. I think it actually moved the stock price of some of the big US software houses, the Holistaplans, those kind of cash flow planners, the tax software, because really just out of the box in beta, Hazel was doing some things that a lot of the existing software didn't do. So it's that aggregation of client information. And I think that's where it's really interesting. So where it can go and it can analyze all the documents about your financial life, so all your past returns, all your tax statements, your bank statements, all the current investments, everything about you, all the fact finds, etc., and then start to do tax optimization. It does take away a big bit of what we've had as advisors as our reason for using the human, the ability to do the tax planning and the numbers and that kind of stuff. So I thought that was an interesting launch and maybe points the way to what's coming. Obviously, that's US only at the moment. I don't know if they've got any plans to move into the UK. Maybe we should all hope not. Or Abraham will build something which will be the UK Hazel. But as you think, so I was giving a presentation on AI and financial services last week, and I think the question from the audience, which actually made me stop in my tracks a little bit, and I had one actually, I think Abraham and I you and I were doing a presentation. We had a similar question from the floor, which was from a younger person in both cases. And they said, well, if everything you've predicted is going to come right, where will be the entry jobs for financial services? All very well if you're already an advisor, but where are the admin jobs, the power planning jobs going to be in the future if AI starts doing report writing, case submission, sitting on hold to the providers to get valuation data, et cetera, et cetera. And it's a really good question because you can't freshly mint advisors out of the box, or maybe you can, maybe that's the answer. But you do the AI certainly closer to eroding quite a lot of those entry level roles first. And it's probably the lunch of those that it will get eaten first before it moves on and starts taking over the advisory piece. I don't know. Abraham, what did you think? Did you see the Hazel launch?
So, yes, I did. So I'll come back to Hazel, hold that thought. So there is actually, a kernel of truth in, what we're discussing here in Dan's article, and I like what Philippa said, which is like, where are you getting your information from about this? Because on the one hand, there is the tendency to just listen to what's being talked about on the surface and drive this, hysteria to the nth degree. On the other hand, it is possible, it is common to see the approach that Dan was attacking in his article, which is this head in the sand approach, where it's like, oh, we're all going to be fine, And again, I like the one paragraph where he talked about this idea of Pascal wager. If you said something doesn't exist, this is Pascal, the scientist. He says, well, if you said God doesn't exist and you live your life as though he doesn't exist, and then it turns out that you're wrong and it does exist, then you're in trouble. Equally, if you live your life as though it does exist and you turn out to be wrong, then you have nothing to lose. So this is this is important. So a couple of things. So from my perspective, a couple of things. We are already the week before the Hazel week that you're talking about. So the first week in February, we saw a massive decline in the share price of SaaS companies generally. So these are traditional software companies, about 26% decline in the value of traditional SaaS company. They're calling it SaaSpocalypse, I think is what they're calling it in the U. Yes, yeah, I've seen that SaaS together, so things like that. So, and the idea is that AI is going to eat the lunch of traditional SaaS companies, your, sales forces of this world and all that stuff. And that is true to an extent. Then the following week, the second week in February, when Hazel, which is the AI agent of a new, I say new, it's it's about 6 years old now. Custodial provider for advisor in the US, Ultrust, launched to the marketplace. That took about 10% of the valuation of the biggest, most established players in the industry. And your LPL, your Schwabs of this world were taking a beating in the marketplace. And then that actually spilled over to the UK market as well. So we can't say nothing is going on here. There is something fundamentally shifting. And I like Dan's call to arms, if you like, for financial advisors to really, reassess where our value lies to the end investor. So now, one thing I will say is that if you look at the entire financial services stack, so you look at technology providers, platform and custodial providers, asset managers, DFMs, there is nowhere I would rather be, and financial advisors, there is nowhere I would rather be in all of this equation than the financial advisor's job, the financial planner's job. But make no mistake, to say that, some of the job or activities that a financial advisors consider their value points aren't going to be eroded away by AI is just not true. I wrote, I spoke about this a year ago at Advisor 3.0. Things like cash flow modeling, portfolio analysis, rebalancing, picking of funds, tax optimization even. Those, I actually created a chart of their probability of being removed by AI. And I have seen this in our own business. I have seen, we started an AI lab 2 years ago, didn't say a word to the market, experimenting, created several proof of concept. It can create a plan. It can create a pensions illustration. It can, open an account. All of that is possible. But where I have issues with Dan's argument is, on the one hand, that this emotional edge that the human advisors have, this human touch, is going to be completely eroded away. I struggle with that. And I'll give you a simple test. Do we have today, so all of this thing is true, millions of people are using, using AI for as therapists. Are therapists in less demand than they were a year ago? Well, I asked ChatGPT, I asked Google whether there is any evidence that, that therapists are being made redundant. I found none. There isn't any. So even though millions of people are using these things, and this is the crux of my argument, which is when it comes to high value, high impact decisions, I don't believe that we are anywhere close to humans trusting with those sort of things. So for instance, would you put your child, my child, would I put my child, God forbid, who has a eating disorder or is self-harming, or, this very high, there's a word I'm looking for, I can't get it, but this high stakes area, would I trust AI to, advise and guide and coach in those sort of things? I don't think so. Low stake issues, I don't know, friendship squabbles, you're down from issues happening at work and things like that, of course, so can AI help in those sort of low stakes area? Absolutely. But when it comes to high stakes area, decision making, I'm going to sell my business. So someone's going to sell their business. They're going to get millions of pounds, and decisions have to be made about tax impact on their lives and all that stuff. They're going through a divorce. They need help and guidance. Think about this. You're going through a divorce and you need help and guidance about the money, as well as all the legal issues, as well as kids. Would you want AI to be dealing with all of these issues, or would you rather focus on one of those areas, your own mental well-being, and let another human, a professional, deal with all of these things? Decision to leave work completely. I think Dan has a very, very important point in that article, which is we can't just bury our heads in the sand. But to your point, Philippa, there is the danger of just understanding what's not understanding what's going on at a much deeper level, and following I'm becoming totally hysterical about this. That's where I am sitting. Bad financial advice, low value financial advice, rebalancing portfolio, picking funds. We've been saying this forever and ever. Cash flow modeling including. These things are going to be automated away, and the human advisor will move up, that value chain. And yes, those who don't move up that value chain will get eaten alive, and will get disrupted. Absolutely.
Yeah, so I'm running the risk of not agreeing with either of you today. This is not, maybe it's my fault. So I think if you take the best amongst us in terms of financial advisors, those that have, maybe kinder qualified, or, I'm sure all of Philippa's advisors, highly empathetic, very highly educated, really able to connect with clients, then yes, I agree. I'm just not sure that's the majority of financial advisors, to be honest, from the ones I meet. And you talk about empathy. I mean, we already know that AI is much better at sitting in a client meeting and spotting vulnerability than human advisors, because we've seen the stats for that. So if it can do that, and okay, maybe it's poor to give an example of two people and then say, well, this applies to everything, but You've got people in the US now. I say people. You've got men in the US now who are trying to get the law changed so they can marry their AI girlfriends. I think we can underestimate how much human beings, and maybe it's gendered, maybe we're more stupid, us men, but you can underestimate how much actually human beings will trust the AI. Maybe they're not right to, but that doesn't mean rationally because they're not right to, they won't. So I don't know. Just on this one, and then we'll bring Philippa back in. The only thing I didn't agree with about Dan is where he felt it was going. So he felt that the model would become the advisor would look after just 100 clients, super.
Even less. He said 50.
Yeah, so I guess in that sense, you become almost a personal trainer to 50 clients, a personal financial trainer to 50 clients. We pay personal trainers. AI isn't very good at replacing personal trainers, actually, because it just makes us do stuff we don't want to do. So that kind of coaching relationship, I can see that argument. I just think earlier on in the article, he also argued that the cost of financial advice is going to come down. And therefore, with 50 clients at lower cost per client, those numbers don't work. The presentation I was giving the other day was trying to get the audience to believe that we could look to 1,000 clients per advisor if AI was doing everything else. No one in the room believed me, but I said you're just 6 to 12 months away from me being right. But that's 4 meetings a day, actually. So four meetings on Teams for an hour, that's perfectly doable, but only if AI is doing all the other stuff around the meeting. So I don't know. Philippa, you've been very quiet.
Okay, so
bring this one to a close for us before we come on to the other things.
Yeah, the notes that I've made have been around, do you know what? Some people will use it to do their financial plan. Some people won't, because humans are quite diverse. I wonder whether the skill really of the financial advisor is spotting what conversation to have, because AI, those large language models depend on the user putting in the right prompt. So is that a potential sort of, expertise of our advisors? I think it is. Our advisors are much more used to seeing how people relate to money, the sort of mistakes that people make or the questions they don't ask themselves, or, uncovering a need for them, or uncovering a perspective or a view. And certainly my financial planner did that for me in a world where, I hadn't even thought about leaving the law and doing something else. I definitely think that there is something in that input side of things. And I think we probably are not talking enough about the client perspective. So in a world in which all of our clients run away from us and say, I don't need you anymore, I'm going to do it all through ChatGPT, is that going to happen? I don't think so. I think they have a good experience. I think that we bring they're able to delegate stuff to us on the one hand, and on the other hand, they get great challenge. So when we're thinking about our future generations and whether people are going to say, yes, I need to go and pay money for financial planning advice, you made a really interesting point there, Matt, to say it's not a very good personal trainer because you've still got to do stuff as a human on the other side. I think possibly we have underestimated how much humans actually want to get involved in this stuff. So everybody is dealing with their own AI evolution, revolution, whatever you want to call it, in their own jobs. That context switching, that cognitive load for themselves, when they come home, are they going to use ChatGPT to do that? Or are they going to say, I've got an aubergine, an egg and some pasta in my fridge, come up with a recipe for me? Yeah. So I still think there's a role to play. I mean, that's my assumption. I could be entirely wrong, but my assumption is there's still a role to play for tired humans of fighting their own battles on a day-to-day basis who don't know what prompts to put into the AI large language model in order to get themselves the best possible outcome. And our job is to go out into the world and say to people, actually, we don't just do cash flows. We don't just, most financial advisors probably don't do cash flows, actually, quite shockingly. We don't just invest your money. We don't just give tax advice. Actually, the one thing I really did hard agree with Dan's article was we're much more life architects than anything else.
Yeah, brilliant. That's a great way to finish that one off. So yes, we're all going to become prompt engineers, essentially. Those are the entry-level jobs. I mean, look, if you're going to go for an entry-level job, just show that you know how to prompt AI. Most financial advisors will take you on for an entry-level job, just if you can do that. So, Philippa, you spotted a couple of things, just switching topics slightly. I mean, it is related because AI is good and bad. Come on, I've had a very bad experience recently with AI from a scam point of view, but you spotted there were a couple of scam type news articles.
Of course I did.
Of course you did. Yeah, we've persuaded you over to the dark side, leaving the law to come over and join us. Talk us through it.
Well, it's kind of, I saw them and sighed, really. There was the age-old story. We've just had a couple of people banned from financial services. The story is an old one, and it's one I've seen many times. So you have a financial advice firm. They have a relationship with an introducer. The introducer is cold calling people, passing those clients over to the advisor, because the advisor is the only one that can, of course, give the advice on what those people should do with their pensions. The advice with the contents of people's pensions is to put them into, I can't remember, this one was called, the Global Conservative Fund or something. And the investments that they have invested in happen to be connected to the introducer. So the whole thing is pretty ugly. And of course, at some point, and we don't know when or where, because these people never really want to talk to me, at some point, the advisor is receiving not only a bunch of clients, but also some backhanded money coming through the door. The point in the most recent one I saw was that, again, a young person had got caught up in it. So this advisor who was running his firm had roped in a young advisor who was newly qualified that he could then push all the clients to, give them the spiel of, everybody should be in this global conservative fund. And this young advisor had ended up in a situation where they're now banned from financial services and will never work again in financial services. And I care kind of less about the guy who set it all up and masterminded it. But as you were saying earlier, Matt, our young people coming into the financial services industry profession, how do we support them more in being able to understand where the bad guys are, where the snakes are, and giving them the wherewithal to say, this sounds a bit smelly, and I'm not sure I want to get involved in it? Because when you're first in professional life, you are eager as anything. You want to get involved. You want to prove you're right. You want to follow what you want, that slap on the back. Like how do we protect our junior people? How do we give them the ability to walk away from this nonsense? Because the point about these scams is that they never happen with just one person. There's always other people that get sucked into the orbit.
Yeah, I think it's a really good it's a really good point. Actually, it's not the one I picked up from the news article itself, and I think it's a really good challenge about how do we prevent that. I mean, I think our professional bodies can help. So I know I do. I don't know if both of you do, but I do mentoring for young advisors, trainee advisors, people who are new entrants through the CII. And at any one time, I've probably got sort of eight or nine people in some form of stage of mentoring. None of them work for me or with me. So they're all working in other financial services firms. And the one advantage of that is it means you are getting a sounding board. So you're getting an independent professional view on what you're being asked to do in your own financial services firm, which I think can be very valuable. I mean, I would say that because I'm one of the mentors, but I mean, that is probably the only way I can think where it could be scalable. Because if I can help 8 people, and Abraham was mentoring 8 people that had nothing to do with Timeline, Philippa, you were doing 8 as well that weren't working for you in Paradigm. Actually, you wouldn't need as many people to commit to doing that. Maybe that's a solution. I don't know. What do you guys think?
How did you get involved in that? Sorry, Abraham.
Just as a CII member, so PFS member. It's the Connect program. So I just volunteered to do it. And you get people select you. I'm not sure I'd want to know who they got offered. Probably just me if they end up selecting me. But yeah, it's sort of a funnel for people who want to, who are looking at the profession, looking at the industry, or already in it, who can go via the CII and get filtered down to someone who's, a bit longer in the tooth, like I am.
Yeah, well, there's our first call to action. It's for the good guys to go and volunteer. Sorry, Abraham, over to you.
No, I totally agree. I mean, I think that to me, the value, this is the value of exposing, younger, new entrants to more than what's available in their own firms. Send them to conferences, I guess in this example, if the boss was the bad guy, he wouldn't want them to be exposed. But if I was a younger person in organization, any of this organization, or a new entrant in this organization, I would want to know more than what exists within my own firm, go out to conferences, join professional bodies. As a matter of fact, I'm about to smoke up my own, one of the most powerful things that I did in the early phase of my career was joining the IFP and of course the PFS, and going to multiple branch meetings, multiple monthly branch meetings. So I'll go to the one in London, I'll go to the one in Essex, I'll go to the one in Sussex. Okay, I was a bit crazy, but basically pounding the pavement, you get to meet a lot of people, you get to hear a range of voices. I think that's really the only way I can think of on my feet. That you can avoid this siloed approach when it comes to how you learn, where you learn from, how you can spot good, bad, and everything in between.
Yeah, so I was asking myself yesterday, where are the role models? Where are the roles? Because we need to have that inspiration. We had, like you, Abraham, I joined the IFP and I, it was, I know a lot of people say the same thing, but really it was like switching a light on, and I suddenly found all these amazing people who genuinely did not put profits first. They genuinely put their clients' outcomes first. The holistic side of things. And I came from the law. I'd never seen that before. Literally never seen that before. How do we, as the people who are becoming the older people in the industry, how do we inspire people with the right stories? Because all the wrong stories are getting into the papers. And that's another problem, because if people are choosing between an industry they don't trust and AI, well, they might trust AI more. So how do we go out and get those inspirational stories? How do we find our role models and get them out there? Are we doing enough to be involved in our community?
Yeah, I think it's a good challenge. I mean, I think it's hard to get into the press, being honest, because I think negative stories do sell. They get more eyeballs and more clicks. So it is hard to sell positive stories. But you are right. I mean, and Abraham, you're right as well. I mean, if we, as the good guys, and everyone who listens to this podcast is one of the good guys, if we turn up to the events, if we get involved, it does take up time, but it is the only way to improve the perception of the profession. Plus all of the good work that's going on now in universities. There's lots of good stuff that's happening, which is great. Might be worth, as we're talking about new entrants, might be worth talking about minimum qualification standards, possibly reducing. This is one I spotted. Everyone's going to have their head in their hands at this one. So, I mean, it's not, I think it's just a proposal from the FCA or something they're looking at. So they're suggesting that possibly targeted advice, which is this more simplified route for advice, might only require a level 2 qualification rather than the level 4 qualification, which is the current minimum for financial advice. I mean, as a fellow and of both CISI and CII, I tend to take the view that actually the minimum qualification for advisors should be raised to level 6, which will attract the haters out there, I'm sure. But the thought of dropping instinctively, and I'm not sure I'm right on this one, the thought of dropping the minimum qualification to level 2 and it still being advice does worry me. I've got a little bit of internal conflicts going on where I think, but actually the point of targeted support is it's simpler. They're trying to address the advice gap. Maybe if it was a bit more tech enabled, maybe that's okay. But I don't know. I mean, level 2 seems like a very low bar to being able to deliver advice.
Yeah. I mean, the phrase, "I wish my professional advisor were less qualified," isn't one I've heard someone say. And it goes back to the point I think that both of you were making around, the de-skilling that AI could bring to every industry. And as humans, I just feel like it's our moral duty to educate ourselves so that we are more skilled. I was suing people prior to RDR. I mean, I continued suing people after RDR, but there was definitely, I mean, it feels to me like if we want
Are
to...
you saying there are less people to sue these days after RDR?
I definitely think there's fewer terrible things happening. I mean, there's some more coming down the track. Of course there is. But where was I going with that? I think if you're going to fill the advice gap, I actually think that's a brilliant thing that AI can do. You've got the likes of Money Matters who are developing its own, financial advice person. And I think that's where AI can actually really, really help. And I think those LLMs are already passing the level 4 qualification. Why? I don't get what it's going to fill. I mean, I did the level 4 qualification whilst I was working full time as a lawyer in 8 months. It's not that hard to do level 4. I think we're just underestimating the people coming into the profession. And I don't hear any other profession or regulators of any profession saying we should dumb down. I just don't hear it.
There's going to be so many people listening to this going, Philippa got a level 4 in 8 months while she's a lawyer. Brilliant. Good for her. Yeah.
But it should take some hard work. And I agree with you, Matt.
Yeah,
I think it is a crying shame that there aren't more certified firms out there. They're not doing it because it's too hard. Shame on you, frankly. If you're the only reason you're not doing it is because it's hard.
I mean, I want to make the case for the other side. but I have to admit I am struggling. Is the proposal that you would have a layer of a lower tier of financial advice? Is that what they're proposing here? Because I think the problem is there is a fear that there's a fair amount of I guess, clarity today between regulated advice and unregulated advice. All right. So then if we're saying, okay, you want people who are involved in money coaching, money advice, all these sort of things to up their level of qualification, absolutely, I would have no issues with that. But I think once you cross that line into regulated territory, to your point, Philippa, we have already determined that a higher bar is required, i.e. lower than level 4. Sorry, anything lower than level 4 doesn't really cut it. We've already been through that journey of lower standards, so why would we go back to it? It's what I don't understand. Why would we? If anything, we will push the bar even higher, but we have to, I don't know, we have to keep coming back to this fact that 92% of people in this country do not have access to a qualified financial advice professional. I don't think introducing lower standards, lower qualifications is the answer to that, I'm afraid.
Yeah, I think I would agree. I mean, I suspect, I don't know, but I suspect this comes off the back of this survey that the FCA sent round about targeted support to firms. And I suspect this suggestion has come from firms who think they can employ, a series of humans who are, I guess, younger, cheaper, less well qualified. I think Philip is right. There's not much of a gap actually between level 2 and level 4 in terms of the time and effort it takes to get there. And I think that ought to be the minimum standard. I think technology is the solution to targeted support, not de-skilling or lessening standards. Absolutely. Abraham, you was linking back to AI and what's going on in the markets at the moment. You reckon there's a big scary myth stalking the markets currently, and you'd like to puncture that myth.
Well, it's not. It's
our last item for today.
Well, Jason Zweig is the one who reckons there is a big scary myth. It's been around for a long time. So he wrote this powerful article in the Wall Street Journal essentially about this concentration myth, so to speak. The argument goes the market is more concentrated than it's ever been. And so therefore that means it's riskier and you should do other things. And the article is actually based on a paper which I'm going to assume no one reads, on a academic paper, I guess, if you like, or a research paper. I think the title of the paper, I had it opened, I might have closed it, but the title of the paper is The Fallacy of Concentration. The point they try to make in the paper and in Jason's article is that at no point in the last 100 years would it have paid off for you to reduce concentration. So in other words, concentration in and of itself is a bogeyman. You can make a case about, market valuation or CAPE ratios and all these things. Even they are not very good timing tools. But to say, just because markets are concentrated, I am going to reduce my concentration doesn't of itself deliver better returns for you in the long run is the point of the article.
All right. Okay. So I was a lawyer for 20 years. I'm not a market analyst. I'm not a market specialist. I mean, you got to follow the theory, haven't you? You got to follow the theory about globally diversified passive funds, and the market is market theory and all that kind of stuff. So I think I have this slight allergy to arguments which are designed to make you feel uncomfortable around stuff that nobody can predict. So we can all run around chasing our tails, and some people will be right and some people will be wrong. But, the chaotic turmoil of the market was ever thus, wasn't it?
Yeah, I think actually that's wonderfully put. This kind of noise that's created around the market's over concentrated, or the US is too big a proportion, or the Mag 7, all of these things, when you boil them down, are essentially just news stories or marketing, really. Why do those stories get put out there? Well, they get put out there so that someone somewhere can earn money pretending that they can avoid those risks. So there's so much of financial services and investment management that frankly plays on people's fears about what could happen, and therefore justifies charging more to try and prevent that thing from happening. It's really quite depressing that it still goes on. But I guess whilst there's still money to be made, there is still going to be marketeers pursuing those stories and trying to make the case for it. So yeah, I agree. It's always been thus. There's always been big companies highly concentrated, or the market highly concentrated in some of those big companies. Some of those big companies have gone bust over time. It doesn't matter. There'll be other big companies along who are profitable, who are making you more wealthy.
Yeah. I mean, it makes me think of, we all must have read Good to Great, the sort of classic Jim Collins, which is more about companies than it is obviously about markets. But I'm not sure that many of the great companies that he talks about are still in existence.
Yeah, no, absolutely. Look, I've been doing this for a quarter of a century now, and the very first work I did was in the UK with Kodak, who invented the digital camera but shelved it because they wanted to support their Advantix camera, their latest film rolls that they had for physical cameras. They were 8,000 staff in the UK. They were 25 by the time I finished up with them, running their redundancy seminars and retirement seminars for them. It's just the cycle of capitalism where big companies will have been very profitable, made you lots of money for a very long time, and then will retrench or collapse or have their market eaten for them. It'll be the same with AI. I'm sure there'll be something else coming along after that. Hopefully I'll be retired by then, so I won't have to worry about that.
I do think it's a fear, certainly, that we see amongst financial advisors, and they tell us it's coming from clients who say, this Mag 7, for instance, represents something like 33% of the, 33% of the S&P 500, slightly less. It's actually less than 20%, maybe 22% of the global market cap. So they say, 7 companies, I'm going to put all my, why am I putting 33% of my equity allocation into these companies? What happens if one of them, disappears off the surface of the earth, or if they crash 10% or 20% or whatever? And you see this, it's sadly a continuing worrying. One thing I promise I will shut up is, as a matter of fact, when you look at actively managed portfolios, they are more concentrated than the traditional passive. So Morningstar did a research, wrote a research that just basically look at other ways of thinking about concentration, not just in terms of holding, in terms of sector, volatility, all these other measures of diversification. And what they find unequivocally is that index funds are by far more concentrated. And I remember from my IMC 101, IMC 1, which is they say, a typical active manager should hold, broadly speaking, about 30 to 40 stocks. Right. And by the power of arithmetic, if you're holding, 30 to 40 stocks, on average, you're holding about 3% of your allocation in one company. 3 times 7 is 21. It's not far off. The difference is that in an index fund, you will hold a long tail of all other companies and be exposed to more sectors than you can do. But again, this is why I don't know where this argument about AI taking over our jobs, financial advisory jobs, is going to end. Is like, well, if all we cared about is numbers and evidence and data, well, active management shouldn't exist, but it does still exist.
There you go. Who thought that was going to be the positive that we were going to close on? Something that shouldn't still exist does still exist, and therefore we're okay. So brilliant. We'll call it a day at that point. If you're listening to this, please rate like and review, 5 stars only for this podcast. If you're one of my mentees, I'll be asking questions before you get your CPD certificate. So make sure you listen to the whole thing. Philippa, thank you very much for your time today. That was excellent. As always, Abraham, lovely to see you, brother. And we will make it a wrap for another Soapbox. Thank you, guys.
Thank you.